You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
And so Gulich was set up for production so that we just slid back, and within about a day and a half, we perforated. It's a seven meter sands, but we perforated 5.5 meters of that. We have 74 meters of pay. And just this sand alone, we have a shut-in pressure of 2,000 psi, so it's overpressured. It tested 16.5 million cubic feet per day, which is the highest test we have gotten to date. And it's on an initial rate of production now of 6 million cubic feet per day. So it's going to be a really good producer. And the really interesting thing is 74 meters, we perfed to 7 meters sand. We still have 67 meters of additional sands that we can perforate in the future for production.
Welcome back to Mining Stock Education. I'm your host, Bill Power, speaking today with Trillion Energy CEO Art Halleran, getting an update on 2 new perforated wells. Well, Art, welcome back onto the program. Congratulations. You're not only 4 for 4 on these new wells, but you're actually exceeding expectations, particularly with these last 2 wells. Please provide us an update.
Yeah, thanks for having me back on. And yeah, I'm really happy with the results. West Akachoka, as everybody knows, we perforated that one, and that one tested around 5.8, 5.9 million cubic feet per day. And now it's on production, and it's probably on about 3.3 to 3.5. I don't know exactly that one. But the big surprise is Gulich. So when we perforate, people think we're just perforating for testing. And the reason why West Akachoka, it takes time, is we actually set everything up for production. And so Gulich was set up for production so that we just slid back, and within about a day and a half, we perforated. It's a 7 meter sands, but we perforated 5.5 meters of that. We have 74 meters of pay. And just this sand alone, we have a shut-in pressure of 2,000 psi, so it's overpressured. It tested 16.5 million cubic feet per day, which is the highest test we have gotten to date. And it's on an initial rate of production now of 6 million cubic feet per day. So it's going to be a really good producer. And the really interesting thing is 74 meters, we perfed to 7 meters sand. We still have 67 meters of additional sands that we can perforate in the future for production.
So Art, when we spoke first 2 years ago, in your presentation, there was a steep decline on future production, but that tail and that steep edge coming out the backside there, it's not so steep anymore, is it?
No, that's right. So when we first started, we had about 20 BCF reserves, and that was a third-party engineering report. And now everybody knows at the year end, December 31st this year, we're up to 48.6 BCF. And that one, what happened there is that we were given, West Akachoka was an exploration before, but because we de-risked it with our wells, it now was classified as an extension. So they gave that as reserves. But in that 48.6 BCF is not included the Gulich discovery. And it's because it was drilled after the fact, after December 31st. And so that's the reason why we have done an update January 31st, which will capture that single well. There's going to be a fairly good ad, which I can't say about anything too much about it until we do the release next week or the following week. But so we went from 20 to 48.6 BCF to larger. We went from about, I believe it was 80 million cubic feet, 80 million US NPV10 to about 450 on the 2P, and now it's going to be higher in January. So we've done some good things, but it's not reflected in the share price, and why it baffles me.
So we're at we're at about 40 cents Canadian or thereabouts when you and I are chatting. The NPV would be about $1.12 US per share. So you're at least 1/3 of what should be reflected. Any more thoughts you could share? What are investors saying to you? What's the discrepancy maybe?
I think initially it was they just didn't believe. They thought it was too good of a story. The other conversation is that there was some large players that were playing the daily market, and so they'd buy and sell for a few pennies. when we add up the amount of shares that were sold and like traded hands in the last year, it's like 580 million shares, which is more than we actually have out there. So you can see there's been a lot of trading. And in another thing I think that shows up is that we are being shorted a fair bit. And so there's a lot of that playing in there too with people who short. But if you look at the market today, especially in the CSE, the selling part of it is starting to dry up. So there's not these big blocks up for sale anymore. And there's starting to be more buying appetite than selling. And the way the shares work is you try to create a buyer who wants the shares, but at the same time now, we need to make people want to keep their shares and not sell their shares. And I think with these 2 wells, so now we have 4 wells for 4, producing, generating revenue, and now with our reserve report and in our update in the next short while, I'm pretty sure we'll convince people not to sell for 40 cents, 45 cents, or 50 cents.
And we're completely self-funding at this point as well then for future development.
Yeah, that's correct. Yeah.
And so what would be the cash flow per month in US dollars with these 4 wells online?
Yeah, so the 4 wells, they're producing, we kind of, over a 6-month period, and because we're still getting $17, but we thought, okay, maybe you might soften to 15. So we just rounded off. At a normal well would be like $1 million. So we have $3 million per month. And now with Gulich, will probably be, almost 2 million. So that's $5 million at the low end revenue for the month.
And that would be 60 million US per year, assuming you don't have more wells, but we still have, is it 9 more wells this year we're going to be bringing online?
Yep, that's correct. Yeah. So we have 2 more. So right now the rig is actually has rigged down and is moving over to the tripod that has Bayhanli well. And that one also is a reserve well. It was proved by a vertical well. So we know what we have there. It's just never been produced. And so it'll start spudding that well. And then it'll move over to Alapili. And then we have 6 sidetracks lined up to round it off. And that will take us well into, late 2023.
Okay. And when all those come online, projections for cash flow per month, we just want to, it's a very simple story here. This is math we're talking about. So what would we be looking at on a per month basis? Our market cap is 150 Canadian as we chat.
The analyst that took a look at it says, okay, at the low end, we're talking $40-60 million for 2023. And then for 2024, you're upwards into $120, $140 million. Maybe if the price softens a bit, maybe 100 million. So 60, 2023, and then over 100 million, 2024.
And that factors in not the reserves, and it doesn't give us any value for the exploration upside. You've identified the stratigraphic targets that you're actively working on, aren't you? Or working on progressing towards drilling them eventually in 18 months or so.
We had a lot of the stratigraphic prospects were defined roughly from the previous work, but we just felt that we wanted to de-risk it more, and that's why we're getting the 3D seismic reprocessed and more AVO done. And that will be done towards probably the fall. And some of the work will be also earlier. And so therefore, we'll be able to map the gas saturation in more accurate detail in the structure. And we'll start having some of those rolling out as drillable prospects. And some of them will be probably 3 or 4 well pools. And that's not included in any of the value or any of the reserves to date. And also what I mentioned, the prospects we also had in the GLJ resource report, other than the ones that we've already drilled, the ones that we haven't drilled are also not in that 48 BCF and the roughly the 430, 450 million US, and that's our percentage. They're not included in that.
Mm-hmm. And our facilities, onshore processing facilities, have more than enough capability to receive the production you're now sending onshore?
The thing we're having, and when we always talk to people about why we keep the wells choked back, so an example with Gulich 2 well, it has a 2,000 PSI reservoir pressure. West Akachoka has 1640 PSI. So there's no way we could produce Gulich at its maximum because it would back out some of the other production from, say, West Akachoka or Akachoka 3. And even at that, though, we're still, it was initially put on at 6 million cubic feet per day, which roughly is double what the other wells were put on.
Okay. And a lot of the future drilling, we should note from a balance sheet perspective, you've already prepaid for a lot of your consumables and future expenditures even this year, right?
And that's part of the issue is that, when we 1 minute we're positive, so we get a cash call, we're positive cash, and then we do the work and we use the consumables, and then we have a negative balance, then we get a cash call and it becomes positive again. And the reason for that is, like you mentioned, we on our own dollar, because we didn't want to have delays, purchased all the casing, all the mud and so on, all the consumables, and at 100% dollar, and we don't get the 51% back until we cash call our partner after the well is done. And the sidetracks came after the fact. So the sidetracks developed because when we perforated the wells, we noticed that there were zones that weren't properly perforated. When we did the fishing job in Akachoka 3, we were lucky, but it could have gone the other way. So we thought no more fishing for, stuff in the borehole. We're just going to do a sidetrack. So for that, we had to purchase additional long lead items like a whipstock and so on. But predominantly, most of the stuff, even for the sidetracks, we already have in our shore base.
Okay, so we have the cash and no future financings planned or in the works right now, just for investors like myself that have held onto the shares for a while.
Yeah, right now the price is just too low. It's, like we're in the 40 cents. The news releases, like these two wells and also the reserve report, the update next week should bring the price up. I mean, people are not going to be able to deny the fact that we have something here. It's not just 20 BCF, right? It is we're going to be a major supplier for Turkey, and that's part of Europe. So we're also a major gas supplier then for Europe.
And you also have a 1 TCF coal bed methane project in Bulgaria. Any movement there, Art, or getting any calls on that project? I'm sure maybe.
We were getting some calls, but the deal they were offering just weren't good enough. So I think with that one, we looked at it, and any work we do now, we won't start getting return for 3-4 years. And the idea would be to focus our attention on SASB, because you can see we grew from 20 BCF to 48, and now on the update January, where people will see we've also have grown. And without imagination, they can see we could keep growing. So our dollars right now are better spent in SASB and around SASB.
Excellent. Well, congratulations. You're 4 for 4. I hope you're, what would that be? 11 for 11 this year. The website is trillion.energy.com. On the CSA, you can find it under the ticker TCF, and on the OTC, TRLEF. Thanks for this update today, Art.
Yeah, thanks a lot for having me on.